Hello traders, Gary Wagner here. It is 11:45 in Honolulu, 4:45 in New York on Tuesday, 10th day of January 2023, and this is the daily report for gold and silver. Although gold closed lower in New York, giving up 0.19% and settling at $1,876.50. It is currently trading in after-hour markets, up $3.50 at $1,881.30. The dollar had fractional gains today of just over 0.25%, with the dollar index currently fixed at 103.02. Because gold gained 0.19%, and dollar strength was 0.27%, we can see that there was extremely fractional buying by traders and market participants in gold. Silver continued the decline that began yesterday, selling off by 0.63% or 15 cents, with the most active March futures contract currently fixed at $23.72. There are many different models that I am looking at currently in terms of where we could see gold run to, where it might correct, and most importantly, where it will end up. I still believe that we will easily top $2,000 by the end of the second quarter of this year. But on this model that we're going to look at today, it suggests that we could be finding some sort of a top or correction. We will see the market decline from here and then move after the completion of a corrective fourth wave to the final fifth wave and where that might conclude. To give you an idea of what we're looking at, it is absolutely clear that we were in a bear count going up until November. This is wave 3. Wave 4 is moving up. And then we have our concluding or fifth wave on November the 3rd. You can see that with this double 5 here. From there, and I am using an Elliott wave get system, which never really correctly defines wave 2, but it is looking at a wave 1, a wave 2, but what's most importantly, it does, I believe, accurately predict that we are currently within a wave 3, that it is determining could end at 1895 to current pricing 1880, or actually go as high as about 1950. You can see that 3 right here. It is also predicting that once a correction takes place, it will lead to a correction of either 1840 or 1800. That's signified by this 4 here, and I've kind of buried this 4 here. Most importantly, it then looks at a fifth wave, either moving to approximately 1970 or as high as 2050. This is a much more short-term count using a daily chart. The way I am calculating that gold will take out the current all-time record high is by using weekly charts. However, I bring this chart to your attention so that you recognize there is a distinct possibility that gold pricing will correct here, go back to anywhere around 1840, and then move up to 1960. Again, this is a short-term Elliott wave count. The chart that we are looking at is a weekly chart. It was converted from the daily chart we just looked at, so it contains a much longer count. On this count, it looks at a corrective wave 4 concluding at 1617 or the beginning of November, and we are in a long extended fifth wave. They are projecting that this fifth wave could go as high as $2,200. And I believe that that is highly achievable. Of course, as our subscribers, the most important thing I can discuss is my short-term expectations for gold pricing. And I believe still that there is a high probability that gold pricing will correct at the current level of approximately 1881. If that is the case, I would look for a retracement to approximately 1820. The deepest it would go would be 1791, although I am not looking at that as strong of a possibility. Of course, as we've talked about, the other option is that it barrels through this, and if we see gold break 1881 on a closing basis, we would look at a target of $1,910. We want to make the gold forecast meet your expectations and your needs to the best of our ability. There is a link in the proper action section that will be there over the next couple of days to take a member survey. Please take a moment to fill out the survey so that we can make the gold forecast your gold forecast. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.